Hi there, welcome back to Are Private Real Estate Funds a Good Investment? Now let's get back to it. Now you know all about what to look out for, but what type of fund is right for you? There are several types of real estate funds to choose from, and each has its own investment focus, strategy, and also risk profile. Some of the common types include core funds. Now, these funds focus on stable, income-producing properties in prime locations. They typically have lower risk and lower return potential, making them suitable for conservative investors seeking consistent income. Sometimes they're also referred to as coupon clippers. Core plus funds. Now, these particular types of funds invest in properties with more moderate risk and return profiles, often focusing on improving the performance of undermanaged assets or targeting emerging markets. This strategy can offer higher returns in core funds with some additional risk. One of my favorite, value add funds. Now, these funds target properties that require significant improvements or repositioning to unlock their full potential. Now, this strategy often involves higher risk and higher return potential as it requires more active management and a deep understanding of the market dynamics. And the last one are opportunistic funds. Now, these funds seek to capitalize on unique opportunities such as distressed assets, maybe development projects, or even major market corrections. They typically have the highest risk and return potential as they require a high level of expertise, resources, and also market timing to execute effectively. When selecting a fund, consider your investment goals, your risk tolerance, and also time horizon to ensure that the fund's particular strategy that they have also aligns with your own personal objectives. Now again, funds may defy the law of physics, but they do not defy the ultimate law of real estate, which is location, location, location. And location is just as important as ever. The markets that a fund invests in can greatly affect the performance of that particular fund. And just like if you were to buy a property by yourself, the performance of the investment is heavily dependent on local economic and demographic factors. Some key factors to look out for include job growth, population growth, and also supply and demand economics. Some key questions that you need to ask yourself include, is the local job market strong? And are there signs of growth in industries that will drive demand for housing or commercial real estate? Whatever type of real estate you're investing in. What is the unemployment rate and how does it compare to the national average? Is the local population growing? And if so, at what rate? Are there any major demographic trends that could impact the local real estate market, such as an aging population or maybe an influx of young professionals? What is the current supply of housing or commercial real estate in the market, and is it in line with demand? These are just a few examples that any experienced sponsor should be able to answer very quickly. Incorporating real estate funds into your investment portfolio can provide diversification, income, and the potential for long-term capital appreciation. When determining the appropriate allocation to real estate funds, consider your overall investment goals, your risk tolerance, and time horizon. Real estate funds can be an effective way to diversify your portfolio and reduce its overall risk. Now, by investing in a fund, you gain exposure to a range of properties and markets, which can help spread the risk and potentially provide more stable returns over time. In addition, real estate funds can provide a steady income stream through rental income and dividends. This can be an attractive feature for investors seeking regular cash flow or those in wealth preservation stage. Finally, real estate funds offer the potential for long-term capital appreciation as the value of the properties in the fund may increase over time. This can contribute to overall portfolio growth and help you achieve your long-term financial goals. Now, before I wrap up, we want to offer you a free gift as a thank you for watching this video. In the description, you're going to find a link to our free guide on mobile home park investing, one of my favorite asset classes that we know like the back of our hands. If you've already downloaded it, consider this reminder to dive in. Thanks for watching, and I'll see you next time.